Welcome, everyone. We are pleased that you have joined us for today's webinar titled Key Financial Numbers for 2022. The webinar will last approximately 15 minutes, and at the end, you will be given an opportunity to receive supporting materials by email. You will also be told how you may email questions related to today's content to the presenter. Today's presenter is Jennifer Lawler. Jennifer joined the Advanced Underwriting team in October of 2014. Before joining the team, she spent 6 years working for a tax and estate planning group. While there, she worked extensively on tax return prep, estate planning, and assisting clients with their tax needs. Jennifer will draw on her legal, tax, and life insurance background and practical experience for today's webinar. And here she is.
Thanks, Amber, and thanks for joining us today. We all hope that you have had a wonderful holiday season and a happy new year. We're going to get back into the swing of things this month with some key financial numbers that you should know. Before we start on those, though, we are going to decide on a topic for next month's webinar. The possible topics are HSAs in a nutshell, big mistake with self-directed IRAs, and trust as a beneficiary of an NQDA. I'll go ahead and launch that poll, and we will give you a few minutes, well, actually a minute, to decide what you'd like to hear about next month. Next month's webinar will be on the first Wednesday of the month, like always. So it'll be February 2nd, 2022, for those that are interested. We'll give everybody about 30 more seconds to make their vote. All right, just a few more seconds if you want to vote on next month's webinar topic. All right, I'm going to close the poll. It looks like next month's topic will be trust as a beneficiary of an NQDA. Again, that'll be the first Wednesday of the month. On February 2nd, 2022. Let's get started with today's content, but before we do, we have to acknowledge that there has been a lot of talk about tax reform for 2022, but as of today, that's all it is, talk. And I know everyone is wondering what the future of any potential tax reform may look like, but our magic 8-ball response is cannot predict now and ask again later. So as of today, we are working with the numbers that we know will be applicable if nothing else is passed for 2022. But rest assured that if new tax reform packages do pass and become law, we here at Advanced Underwriting Consultants have you covered, and we will present that information to you as soon as it's available. Now back to today's presentation. We'll cover a few different topics, including some of the key retirement plan numbers for 2022. We'll also hit some of the highlights for individual planning for 2022. And finally, we'll summarize some of the more commonly asked about miscellaneous and general numbers that are just good to know numbers in 2022. Typically, the IRS updates key financial numbers annually. These numbers are adjusted based on the cost of living index. Some of the numbers increased, some stayed the same, and we'll even discuss one number that decreased, oddly enough. Again, as of today, January 5th, 2022, all of these numbers are current, and if there are updates or changes, we'll cover them as quickly as possible after they are made. We'll start with some of the key financial numbers that will affect retirement planning in 2022. These numbers are unlikely to change with any new legislation. These are numbers that we would expect to be revisited time and time again throughout the year if you work much in qualified retirement planning. We are going to display the 2021 numbers alongside the 2022 numbers so that you can see the difference between the 2 years. We're going to start with the maximum contribution that can be made to a defined contribution plan under Section 415. As you can see, this number increased slightly when compared to the 2021 number. This number includes elective deferrals made by the employees, as well as employer contributions such as matching contributions or profit-sharing contributions. The limit on elective deferrals into Section 401k, Section 403b, and Section 457b plans increased slightly as well, up to $20,500 for 2022. It's worth noting that this total is per person rather than per plan. So if an individual left employment at a job where they had a 401k mid-year and took a job with another employer with another 401k plan, the most that can be contributed between the two employer plans is $20,500 rather than $20,500 per plan in 2022. The catch-up for those age 50 or older remained the same at $6,500. So for 2022, employees that had attained age 50 or that will attain age 50 by the year end can contribute a total of $27,000 to their employer plan. The maximum deferral amount for simple IRA and simple 401k plans increased slightly from 2021 to $14,000 in 2022, but the catch-up for those age 50 or older remained the same at $3,000, for a grand total of $17,000 for those participating in simple plans that attain age 50 or older in 2022. The IRA contribution limits remain the same at $6,000. The IRA catch-up also remained the same at $1,000. In 2022, those age 50 or older with enough earned income can contribute up to $7,000 to their IRA. Again, this is per person, not per IRA type. So you cannot contribute $7,000 to a traditional IRA and then $7,000 to a Roth IRA. That's the total between both traditional and Roth. It's also a good time to remind everyone that the age limitation on traditional IRA contributions was removed with the Secure Act. So regardless of age, individuals with enough earned income can make traditional IRA contributions. Whether or not that contribution is deductible will, of course, depend on their income and whether or not they are considered covered by a retirement plan at work. Now we're going to shift to some of the individual key numbers you should know in 2022. We mentioned earlier that there's been a lot of talk of tax reform over the past few years, but there haven't been any actual changes made yet. If we see significant changes, these are some of the areas that we would expect to see them in. And again, if those changes do come, we will certainly address them as quickly as possible. The individual income tax rates remain the same at 10, 12, 22, 24, 32, 35, and 37, but the income thresholds increased slightly for 2022 due to inflation. These numbers aren't that exciting and are rather tedious to recite in a presentation, so I omitted them here, but if you are interested in those, at the end of this webinar, I will tell you how you can request that information from us. The capital gains rates brackets also remain the same at 0, 15, and 20%. Again, if you'd like more detail of those income thresholds for those brackets, we'll be happy to share that information with you if you request it. Another thing to note is that the federal estate and gift tax exemption for 2022 was increased to $12.06 million per person. So a married couple will have a combined exemption of $24.12 million for 2022. This is a number that we'll be keeping our eye on in 2022. It's one of those that seems like it would likely change if there was tax reform passed. It'll also be good news to some of your high net worth and high estate value clients that the annual gift exclusion increased a little bit up to $16,000 per individual in 2022. So a married couple can gift up to $32,000 to any individual in 2022 without the need to file a gift tax return. The Medicare surtax is still something we have to be worried about in 2022. It applies to those who have net investment income above certain thresholds. The rate of 3.8% applies to the lesser of net investment income or modified adjusted gross income over certain thresholds. For married filing joint filers, that threshold is $250,000, and for single filers, that threshold is $200,000. This tax is in addition to the regular income tax rates for those really high earners up in that 37% bracket. If they have a lot of investment income, this will mean that they're going to be taxed at about 40%. So that's just a good thing to know about and for them to be aware of. Qualified charitable distributions are something that we here at Advanced Underwriting Consultants really love. So we love to talk about them. And if you have any questions about them, don't hesitate to contact us. We'd love to answer them. QCDs, or qualified charitable distributions, are still a viable way for those aged 70 and a half or older to gift to a charity in 2022. These gifts will also satisfy their RMD requirements. Taxpayers are allowed to gift up to $100,000 a year from their IRA through a qualified charitable distribution without the gift being included in their taxable income. The gift does have to go directly from the IRA to the charity. In other words, if the check is written to the individual and then the individual gives the money to the charity, it will not qualify as a QCD. The amounts would be included in the taxpayer's income, and then the taxpayer would have to be eligible to itemize on their tax return in order to take a deduction for the gift. And yes, that age requirement for QCDs is still 70 and a half, even though the RMD age went up to 72. It's also worth mentioning that those who have inherited IRAs are eligible for QCDs as long as they're 70 and a half. So for those people that have those newly inherited IRAs that have to be depleted faster, QCDs are a good way to do that if they're charitably minded. Now we're going to move on to some of those miscellaneous numbers that are just kind of handy to know that will come up every now and then. The IRS often adjusts the mileage rate for business use of a car, or mileage driven for medical or moving expenses, and or mileage driven for charitable purposes. The standard mileage rate for business use of a car in 2022 increased to 58.5 cents per mile. The rates for medical or moving expenses increased to 18 cents per mile, while the charitable rate stayed the same at 14 cents per mile. One of the more interesting updates this year is the long-term care per diem benefit amount for 2022. In 2022, a qualified long-term care insurance policy can pay a tax-free per diem benefit of up to $390 per day, or actual long-term care expenses if they are greater. This number is interesting to us because it actually decreased in 2021. The per diem, the daily rate was $400 a day. So it went down $10 a day. It's just interesting to note. We don't have any explanation for it. We know that medical costs didn't decrease in 2021, but it's just something that caught our eye. C Corp rates remain the same at 21%. This is another number that we'll be keeping our eye on throughout this year, as lots of different ideas have been tossed around pertaining to C Corp taxation and those rates. So it's another number that we would expect to maybe see change if there was change to come. It's also good to note that as of current law, the 20% deduction for pass-through businesses is still available. Pass-through businesses include S-corps, partnerships, and sole proprietorships. The full 20% deduction is available for all pass-through businesses where income is below $170,050 for single filers or below $340,100 for married filing joint filers. The deduction may be completely eliminated where taxable income exceeds these thresholds, depending on the type of business, the owner's compensation, and the business's depreciable assets. A lot goes into this deduction calculation. It's pretty complicated, but what's important to know is that under current law, it is still available in 2022. These updates almost always have an impact on our clients' tax strategies and retirement planning. Being knowledgeable about these numbers allows us to help our clients determine how they can save for retirement planning and best strategies for reducing or mitigating taxes in 2022. Likewise, understanding these numbers can help our business owner clients make decisions about their businesses. It's a good time to take advantage of those lower rates for the C Corps and that pass-through deduction, assuming that they will still be available this full year. Some of these numbers may be especially important to know for your high net worth clients and high income clients that may be worried about the future and the future tax changes. These clients may be anxious about changes in the years ahead, and they may want to take advantage of these rates while they are available. And again, that's assuming that no changes are made this year. The numbers that we've discussed today are just some of the numbers that are most important to consider for this year. But maybe most importantly, these changes create a good opportunity to reach out to your clients and discuss their needs and concerns. As I mentioned earlier, if you would like more detail on these numbers, please reach out to us. We have all of these numbers and more in our most recent issue of Think About It. You can email us at asktheexpert@advancedunderwriting.com. Again, that's asktheexpert@advancedunderwriting.com and request a copy of that, and we will share it with you. You may also email any questions related to today's webinar to that email address. For more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. Again, that's 615-224-1291. If you would like to view this webinar again or any of our previous webinars, then look us up on YouTube, where we post all of our webinars on our YouTube channel. You can find us under Advanced Underwriting Consultants. If you subscribe, you'll get a notification every time there is a new video or a new webinar posted. Thanks for joining us, and don't forget to join us on February 2nd of 2022 for Trust as a Beneficiary of an NQDA. So thanks again for joining us, and best wishes for continued success.